All right, let's jump right in. We're looking at Amplefield Limited's full year results for 2025. And honestly, the numbers are kind of weird. They don't seem to add up at first glance. So we're going to dig in and figure out what's really going on as this company goes through a massive change. So here's the big question, the mystery we're trying to solve today. How on earth does a company's revenue drop by a whopping 39%, but its profit per share actually goes up? I mean, that sounds completely backward, right? Well, the answer tells a really cool story about a company trying to reinvent itself. Let's get into it. Okay, first things first, let's just look at the top line number, the total money coming in. And wow, you can see it right here. Amplefield's revenue took a major nosedive. We're talking from almost 13 million Singapore dollars in 2024 all the way down to just under 8 million in 2025. That is a huge 39% drop. So that's part one of our puzzle. Now, this is where things get really interesting. You'd expect profits to fall off a cliff right alongside revenue, but they didn't. I mean, yeah, profit for the period went down from $554,000 to $378,000. But that's a 32% dip, not the 39% we saw with revenue. And remember, this doesn't even touch on that profit per share number yet. So you can tell something else is going on under the surface. All right, so let's get into this tale of two very different years. We're going to really unpack the headline numbers, comparing 2025 to 2024 to see what's driving this performance. So to figure out that huge revenue drop, we've got to look at Amplefield's bread and butter, its traditional business, property development. This is really where the plot thickens, or in this case, where it thins out. And you know what? We don't even have to guess. The company tells us straight up in their annual report. They say that the decrease was due mainly to lower sales contribution from the property development/construction segment in Johor. So, boom, we know exactly which part of the company is causing the problem. But just how bad was this slowdown? Let's put this in the simplest terms possible. Just look at the number of apartments they sold. This comparison is going to show you the sheer scale of the collapse. Okay, so in fiscal year 2024, things were looking pretty good. The company sold 84 apartments. That was the engine, right? That's what was driving that nearly $13 million in revenue. And now, get ready for it, in 2025, they sold just four apartments. I mean, from 84 down to 4. That right there explains everything. It's the whole reason for that massive 39% revenue drop. That well has pretty much run dry. Okay, so the property business is struggling. That seems like a bad story, right? But it's not the whole story. At the same time, Amplefield has been making a huge, game-changing move into a totally new area, manufacturing. Now, before we look at the new numbers, let's just quickly talk about business segments. Just think of them as different departments or mini companies inside the main company. Each one, like property or manufacturing, makes its own money and has its own costs. You gotta get this to see what Amplefield is doing. All right, this table right here, this is the heart of the entire story. Just look at the property development row. You can see revenue just collapsing from over $10 million to barely $378,000. Ouch. But then look at the manufacturing row. In 2024, zero, nothing. In 2025, it's a brand new SS $4.8 million business. This is the pivot, right here in black and white. So let's just put a number on that decline. The old business, property, saw its revenue drop by almost $10 million in just 1 year. That is a massive hole for any company to try and fill. And this is how they started to fill it. They created a manufacturing division that brought in nearly $5 million from a complete standstill. Now, it wasn't quite enough to make up for that entire property shortfall, which is why overall revenue is still down, but that is a huge news stream of income out of nowhere. Okay, so you might be thinking, wait, if they got all this new revenue, why didn't profits go through the roof? Well, as it turns out, starting a manufacturing business from scratch is really expensive. You've got $3.1 million in costs for materials, another $640,000 for new employees, and then $350,000 just for the depreciation on all the new machines they had to buy. When you add all that up, the new manufacturing segment actually lost a little bit of money in its first year. And that brings us to a really important question. Forget profit for a second. Let's talk about cash. With all these big changes and new expenses, is the company actually generating enough cold, hard cash to fund this whole pivot? It's time for a financial health check. And you know what? The answer is, yeah, they are.
and it's surprisingly strong. Even with lower profits and all this transition stuff going on, Amplefield's main operations still generated over $2 million in positive cash flow. That's a great sign. It shows that the underlying business is still healthy and bringing money in the door.
So what they do with that $2 million in cash? Well, this chart gives us the simple version. They took that cash from operations, spent about $1.15 million of it on investing, building for the future, and then used another $1.2 million for financing things, like paying off loans. Let's zoom in on where that money really went. First, they invested big, $1.3 million on new property, plant, and equipment. That's the machinery for the new manufacturing business. And second, they made their balance sheet stronger by paying back over $1 million in loans to their parent company. So they're building for the future and cleaning up their finances at the same time. Smart. So with this huge pivot happening, what's next for Amplefield? Let's take a look at what the company itself is saying about the future and what that means for investors.
Okay, so the official word from the company is pretty cautious. They mention geopolitical tensions and supply chains, which is basically them saying, hey, the world is a messy place right now. But, and this is the key part, they also say they're continuing to look for opportunities to grow. So the message is basically, we know it's tough out there, but we are absolutely pushing forward. And one of the biggest signals a company can send about its strategy is what it does with dividends. For 2025, Amplefield has decided no dividend. They're not paying one out to shareholders. And that's a very deliberate decision.
And they're not being shy about why. They're holding on to every penny to pour it back into the business. They need that cash for more investments, for day-to-day working capital, and to keep paying down their debts. Basically, they're in full-on reinvestment mode.
Which leaves us with the one big question that really matters now. The old property business is on the decline. The company has made a bold and expensive bet on manufacturing. So the whole thing comes down to this. Can this new venture grow fast enough to secure Amplefield's future? That is the story we'll all be watching.